Why Warren Buffett is holding a record amount of cash. The financial world pays attention when one of the most well-known investors in the world, Warren Buffett, takes action. The Oracle of Omaha is currently in the news, not because of a historic acquisition, but rather because it has a record $140 billion in cash at Berkshire Hathaway. Buffett's decision to amass wealth may seem contradictory as others rush to profit from surging markets or new trends. For those who are familiar with his renowned investment philosophy, however, it is a deliberate approach rather than a retreat. This enormous cash reserve is an indication of impending opportunity rather than merely prudence. Buffett's strategy demonstrates a thorough comprehension of market cycles and his unflinching dedication to value investment in the face of persistent inflation, rising interest rates, and impending economic turmoil. Experienced investors perceive a masterclass in patience and readiness, while others dispute his lack of involvement amid one of the longest bull runs in history. What is causing Buffett to hoard so much money? What do investors stand to gain from this decision? This approach focuses on future positioning as much as asset protection. Examine the causes of this enormous wealth accumulation and learn how Buffett's cautious optimism may transform the uncertainties of today into the biggest opportunity of tomorrow. 1. Getting ready for economic unpredictability. Inflationary pressures, rising interest rates, geopolitical tensions, and concerns about an imminent recession are all hallmarks of the current volatile era facing the global economy. A delicate financial environment is produced by these uncertainties, where market values are subject to sharp swings and economic stability is far from assured. In order to protect Berkshire Hathaway from these erratic circumstances, Warren Buffett made the calculated decision to accumulate substantial cash reserves. As a safety net, liquid assets make sure the business can withstand future economic downturns without taking on debt or jeopardizing its long-term investments. Additionally, this strategy puts Berkshire in a position to take advantage of opportunities that can present themselves in times of market decline or turmoil. Buffett's conviction in preparedness is embodied in his saying, "Only when the tide goes out do you discover who's been swimming naked," which is based on his idea of financial resiliency. Berkshire's cash hoard acts as a buffer against hardship and a launching pad for future expansion in the current unstable environment. 2. Steer clear of overpriced markets. Warren Buffett follows the philosophy of looking for assets whose intrinsic value is far higher than their market price because he is a disciplined value investor. Finding opportunities that fit his approach is becoming more difficult in the current financial environment because many sectors are characterized by exaggerated values. Buffett's reluctance to pursue overpriced assets is seen in his desire to keep cash on hand. He would rather hold off until prices drop to reflect their actual value. In addition to protecting Berkshire Hathaway's money, this strategy reduces the possibility of overpaying for investments that might not perform well over time. His criticism of speculative bubbles and caution against unsustainable growth driven by investor excitement has been constant. Buffett keeps Berkshire in a strong position to seize chances when valuations finally correct by avoiding the temptation to enter an inflated market. His perseverance demonstrates how wise his investment attitude has always been. 3. Setting up for strategic purchases. During recessions, Warren Buffett's approach frequently works well because he seizes cheap possibilities that others might pass up. He has played a key role in taking Berkshire Hathaway to new heights by acting decisively when markets falter. Buffett famously made billion-dollar investments in firms like General Electric and Goldman Sachs during the 2008 financial crisis, obtaining advantageous conditions that greatly benefited Berkshire Hathaway. The company's strong cash reserves, which guaranteed liquidity when most companies were scurrying for funding, allowed for these audacious actions. Buffett's significant cash reserves now put him in a position to take advantage of comparable chances should the market decline or correct. One of the main tenets of his investing strategy is be fearful when others are greedy, and greedy when others are fearful. 4. Gaining from interest rate increases. Warren Buffett's present cash strategy is ideally suited to the increasing interest rate-driven economic climate. Cash has always been viewed as an unproductive asset because it produces little return, particularly when interest rates are low. This dynamic has changed in the current economic environment, though, and cash is now a useful instrument for producing consistent revenue. Buffett has probably invested some of Berkshire Hathaway's enormous cash reserves in treasury bills and other short-term government assets. The Federal Reserve's rate hikes have increased the yields on these securities, offering a safe and low-risk return. With this strategy, the company's capital is guaranteed to be actively contributing to its financial success rather than merely sitting around doing nothing. Additionally, this action demonstrates Buffett's flexibility in modifying his plans in response to shifting market conditions. He strengthens Berkshire Hathaway's financial security and flexibility by taking advantage of rising interest rates to turn what was once a protective cash position into an aggressive income-generating opportunity. 5. A focus on capital preservation. Capital preservation is at the heart of Warren Buffett's investment strategy. Following his first investment guideline, never lose money, follows the second rule, never forget rule number 1. This strategy demonstrates his dedication to safeguarding his investments and explains his decision to keep record sums of cash in Berkshire Hathaway's portfolio. In times of market volatility, when risk and uncertainty are at their highest, protecting capital becomes just as important as making money. Buffett ensures Berkshire Hathaway's stability by limiting exposure to risky assets and speculative endeavors by keeping sizable cash reserves. Additionally, by shielding the business from losses during times of economic instability, this tactic increases its resistance to downturns. Buffett's focus on capital preservation is consistent with his long-term investing strategy. 6. Preserving economic self-sufficiency. Avoiding excessive debt is one of the main ways Warren Buffett ensures his financial independence, which has always been a major component of his investment philosophy. Berkshire Hathaway is protected against the volatility that comes with large levels of leverage, since Buffett prefers to keep sizable cash position, in contrast to many businesses that depend on borrowed capital to finance operations or acquisitions. Debt financing has become more costly and less appealing for businesses due to the present economic climate, which is marked by rising interest rates. 7. Sending a cautionary and patient signal. In addition to being a sound financial move, Warren Buffett's decision to keep a record amount of cash conveys a strong message to his shareholders, prospective investors, and the general public. Buffett's image as a disciplined and wise investor is further cemented by this action, which demonstrates his steadfast faith in Berkshire Hathaway's long-term vision and his patience in waiting for the best opportunity. In summary, Buffett's lasting legacy, patience and strategy. The fact that Warren Buffett has a record $140 billion in cash on hand demonstrates the enduring validity of his investment philosophy. Buffett's strategy is a welcome reminder that patience and discipline are just as important as daring in accumulating wealth, even if the financial industry frequently favors aggressive moves and speculative risks. His current approach is a well-thought-out move to prepare Berkshire Hathaway for the chances that present themselves during uncertainty, not a sign of stagnation. Let us know in the comments what you think about the why Warren Buffett is holding a record amount of cash, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.